there is a difference between entertainment and information and social capital. These are all different things. And the entertainment one's interesting because I do think that even basic AI, in theory, can be more entertaining than most people. Like, it's pretty good at writing jokes, and it'll get better at that over time. And so I think that, like, you don't need AGI to basically get people really entertained, but you're not going to have AGI that's highly trusted, like, ever, for a very simple reason, which is, like, there's no objective function. Like, the reason you trust someone, there is retribution, there is identity, they want to do the right thing for you, they're building capital. And the problem with computers is, like, they don't care, right? There's no, like, there's no reason for them to not cheat on you to some degree, right? And so I think that's going to be the real thing, is that people think it's a computer science problem. It's not. It's actually an economics problem.
All right, welcome to OK Computer. I'm Dan Nathan, joined by Deirdre Bosa. She is the host of CNBC's Tech Check, tech reporter extraordinaire. Debo, welcome back to the pod.
Hi, happy post-Labor Day long weekend.
And not only that, post-earnings season. We were waiting for this Nvidia print that was Thursday after the close. We've had a lot of excitement. We are recording this midday on Tuesday, and lots going on in the NASDAQ. It's down about 2.25%. The S&P is down 1.5%. So that's not something we've seen in a while, really since early August. Just real quickly, though, Dee, after you and I chat, we have Sam Lessin, co-founder of Slow Ventures on. And I got to see Sam on Tech Check numerous times with you, I think over the last year or so. I know that's somebody that you really enjoy speaking to, and I'm excited for his debut on OK Computer.
Sam is one of my favorite tech guests. He always has a hot take and some really good insights into what's going on. He was tweeting this weekend or posting this weekend on founders mode. I don't know if that discourse reached you, Dan, but big in the tech world.
Yeah, I saw a bunch of it, and I've also seen him. He has a tech pod that we're going to get into, but he seems like a hot take machine. So look forward to that conversation. It'll be on right after you and I get done talking. But let's talk of some stuff that's top of mind for you. It seems like there's been a lot of news on the kind of AI chatbot front. I know you keep a close eye on Amazon. They made that $4 billion investment in Anthropic. They're going to be integrating a bunch of Claude, that is their LLM, into Alexa. And again, you know, I kind of get stuck on this when we think about Apple and what they're building on as far as Apple Intelligence on top of Siri. And then when you think of Alexa, that is kind of the engine for an Amazon user. It just doesn't make me too excited. So thoughts there on what's going on. And just lastly, I'll just mention is that we know that some of these investments, clearly Microsoft into OpenAI, a lot of this stuff comes back to them in credits for their cloud services. So they sound like big numbers that are going into it, but there's obviously lots of different ways that they're monetizing those investments.
Yeah, I mean, it also tells us that these Gen AI darlings, they can raise hundreds of millions, in some cases, billions and billions of dollars, but they still don't have distribution. So they need the mega caps, right? Anthropic has investment from both Amazon and Google, but if Amazon is going to use Anthropic's technology to power its home devices, its Echoes, and the Alexa AI assistant, I mean, what are these companies without that kind of distribution? Then you've got OpenAI with Apple. The other kind of interesting story over the last week is OpenAI raising more money and how they may sign up even more mega caps, right? They've already got backing from Microsoft, but reportedly Apple and Nvidia are looking into it as well. And, you know, you do wonder where it all leads. If anyone outside of these two, anyone outside of OpenAI is actually going to be able to survive once these models become commoditized.
Yeah, no doubt. And so the number that's being thrown around is $100 billion for OpenAI. And so some of the big tech folks are going to be investing in that. Nvidia one. So this has to be one of Nvidia's largest customers when you think about it. I think some of the numbers on trailing revenues for OpenAI is probably $4 billion or so. So at $100 billion, you can do that math. And then when you think about distribution, as you just mentioned, you know, Microsoft's their largest distribution partner, right? And so this seems like a very cozy relationship. So Microsoft's reselling this technology, they're integrating it into their own products. And then when you think about OpenAI is probably, at least from a growth standpoint, it's got to be one of their largest customers for Azure. And so I'm just curious, like what the take is out there in the Valley about $100 billion valuation on those trailing sales. And I think the most important point that you just made is that all of these models are going to be, are going to become commoditized at some point. So it just seems like lots of money are being thrown at something that we are not sure that these companies are going to be able to monetize anytime soon.
Right, but these are moonshots, right? And that valuation, while it sounds kind of crazy, $100 billion valuation on maybe $3 billion of annual revenue seems so out of whack if you look at the public markets. But if you live and breathe Silicon Valley like I have for, coming up to 8 years, this is just business as usual. I mean, it barely even elicits a second glance. If you've got a company as powerful as OpenAI with some of, the brightest minds in generative AI and researchers at the company, if they're cutting deals with Apple, if they got investment from Microsoft, those numbers don't really matter, right? The VC model is you'll invest in 100 startups with, financials that don't really add up, and all you need is one of them to pay off. And OpenAI feels very much like the winning horse, right? It's not just this funding round. It's the fact that they came out with, Project Strawberry. It's the fact that they may be looking to restructure from that nonprofit profit sort of dual mandate and welcoming investors that might include Apple and Nvidia. That's sort of what I think the investors see here. And that's why that valuation, even though, it doesn't make sense, it kind of does if you're willing to squint your eyes and, look past a lot of the top line numbers and no bottom line numbers.
No bottom line yet. So I guess the point that you're talking about as far as, these eye-popping valuations and being moonshots, I mean, there is a name, and you and I have talked about it before. And again, they are developing their own LLM, but right now they're an aggregator of some of these other folks, and that would be Perplexity. And when you think of this as a wrapper, right, for Claude, for OpenAI's ChatGPT, and I'm sure, at some point there's going to be others on there, maybe not Meta for a whole host of different reasons, but you think about from a valuation standpoint, I mean, this is a company that was valued in 2023 at less than $1 billion maybe, and recently at $3 billion. But I saw like an interesting headline right here. I think it came out late last week, was that for distribution, they are doing a deal with Comcast Xfinity, and that if you are an Xfinity customer, you can get a year of Perplexity Pro for free. Now, this is, a service that costs $20 a month or so. I think that's a really interesting deal. And it's in some ways, kind of the way that OpenAI is probably thinking about their distribution deal with Apple and this AI product or Apple Intelligence that they're going to be launching that they might not be paying anything for. They got to get this out to the masses and create like a level of adoption that they have yet to be able to do over the last year.
For sure, that's going to be critical, but now I'm going to contradict myself a little bit. Did you see those numbers late last week about the monthly or weekly active users on OpenAI doubling, right, from 100 million, I believe, to 200 million? I think that OpenAI is actually kind of proving that it's pretty good at distribution itself. We talked about how Microsoft has sort of been that way to get out in front of customers, but it's increasingly competing with Microsoft as well, right? It's learning from Microsoft and then creating its own enterprise AI offering that's starting to compete. So while we all think that, OpenAI needs the Microsofts and Apples of the world, they equally need an OpenAI. And that, I think, is what's so interesting about it. And you can see that with OpenAI. I think the case for some of the other Gen AI darlings, like even a Perplexity and an Anthropic, I don't think that is super clear. Like a Perplexity still has to have those kind of deals, which remind me of, the previous generation of tech startups. Remember, like DoorDash, you got a subscription when you sign up for a Chase credit card. I don't know what the margins are on that. I don't think they're very good. But OpenAI is kind of proving to be the exception, I think.
Well, it's also interesting when you look at some of the head-to-head, comparisons of these, models. Perplexity and their ability to kind of access multiple models. I think in many ways it kind of gives them, at least some sort of edge when you see some of these, some of these kind of comparisons. The flip side of that is that OpenAI, it's gotten to 200 million active users or so, but what percentage of those are paying, right? When you think about it, none of these really have ad models just yet. And I know that's something that is going to be coming. But like when you think about some of these other, consumer-facing kind of apps that we've seen over the last, call it 10 or 15 years, very few outside of Facebook have been able to monetize, their users in terms of advertising. If you think about, let's just talk about Twitter and Snap, they're dying a slow death because they were never able to monetize to the level of any of the Facebook public properties. So to me, I find that like almost a curious sort of thing as we move into Web 4.0 or whatever we want to call it, because that's clearly what's going on with these large language models.
No, it's actually a great point, and that makes me sort of pessimistic on all of them out there that don't have, the major backing of a Google or an Apple or a Microsoft. So, I mean, we've got Apple's event a week away, right? And I'm so curious as to how they're going to incorporate OpenAI, but also just what kind of AI features they're going to produce on their own, because that presentation that we saw at WWDC a few months ago was so impressive, but none of it seems ready for prime time. Meanwhile, Google was out with its, AI powered Pixel phone, which, by the way, Dan, I've been playing around with for the last few weeks. None of it works the way that it's been advertised. I don't know if I'm using it incorrectly, but even yesterday, I get an email, right, about all of these dates for kids' school. And I said, hey, Google, put these all in my Google Calendar. Put the stuff that's on my screen right now into Google Calendar. Just no way was it figuring that out. And I've seen these demos on X or Twitter, whatever you want to call it, over the last few weeks, but none of it has been able to be useful for me, which does raise this bigger question. Like, are we really going to monetize these models through subscriptions, or are they just going to be integrated into our daily lives? And it just feels like we're still really far from that killer use case.
Well, I haven't seen too many great reviews of Samsung's AI product that's integrated to the device too. And I'm actually super bearish on what Apple is going to roll out. I think you and I've talked about it a little bit since that sort of June 10th WWDC for multiple reasons, right? So there was a lot of reviews after some folks had some hands-on experience with it, but there weren't that many features, and then the company has come out, since and talked about how the rollout of these features is going to take some time. So if you are an analyst covering this company, you're expecting an upgrade super cycle because that there are 2, 3, 400, million iPhones that are 2, 3, 4 years old. The reason to upgrade to a 16 is not likely going to be Apple Intelligence, at least the way that it rolls out right now. So to me, I think they pulled forward a lot of excitement in the stock market about what may come. I don't think the excitement is about the actual product. It's about the potential upgrade cycle. And I think that that's going to be a 2025 story, not a late 2024 story.
I think that's right. It's going to take longer, but I will say I took the other side. I was extremely bullish on what Apple presented. And I thought if these features work the way that they're presented in the demo, you are going to get that huge upgrade cycle. Like everyone I know is going to want to have access to those features, that easy sort of integration of the ecosystem and like a personal agent, which is, the promise of generative AI in your pocket. But I'm with you, and that especially after playing with the Pixel phone, that this is a lot farther than we think. And it may not be this upgrade cycle because you have to start using it to be able to want it, right? I want to be able to show my friends, look at what it did for me with my kids' school calendar. Nothing like back to school to make you wish you had a Gen AI powered device, by the way.
Yeah, but no doubt. But here's the thing I'd say about Gemini, for instance, with Google, they have 6 properties at over 1 billion users, 3 with over 2 billion users. Yep. And I've been thinking about it just the way that I've been using it within Gmail or Maps or YouTube and that sort of thing. So to me, that's going to be an easy one to use as it kind of.
I was hoping. Yeah. Have you been using it? Has it made your life on Gmail and YouTube better?
I just think it's a nice feature to have embedded in there. And so again, the way we use Google products, it's that you don't have to get a new phone to do it. So that's one of the reasons why I think about how many folks with an iPhone use a lot of those Google, kind of services, and Gemini is going to be built into it. So I'm not that excited because Apple, for instance, or not that excited about Apple Intelligence. They're always really slow to do great software integration, in my opinion. And, we can go back and forth on that. And Siri is Exhibit A for that. So, we'll see. We're not going to see these devices in folks' hands until late October, maybe early November. But the last thing I want to say is that, when you said that, a lot of people upgrade their devices, well, the people that do that, right? The people that I know do that every year. And we live in a little bit of a bubble.
Yeah. However, I would say the features they showed off at WWDC, I think is not just unique to us. The reason I like them is because I think that they appeal to the mainstream. Another question, whether they're actually going to be ready for use, ready for prime time. But I did think there was an important distinction. What they showed off could appeal beyond the tech crowd, which, by the way, I feel like a lot of the tech community should already be using these features. And I don't know why I'm not being able to use them on my Pixel. So.
Yeah. No,
We'll
no,
see.
no doubt. The other one I would just mention is that Meta, they're moving very hard into their Meta AI and work, trying to improve Llama. It seems like, every week we keep seeing, some sort of note. So, not just, Google and Gemini, but you also have Meta that has multiple properties with, a couple billion sort of users, right? And so I think about that as just a free integration into their products. I mean, that's going to be something, as far as I'm concerned, I think Google and Meta have the best opportunities to monetize what they've been building. And so we just need to see some step functions as it relates to improvements.
I'm with you on that. It's all about the distribution, and those two companies, they got it.
Yeah, no doubt. All right, so let's talk about this a little bit. So it's Tuesday midday. I just mentioned Nvidia reported Thursday after the close. The options market was implying a very big move, about 10% in either direction. The next day, that would be Friday, the stock was down about 6.5%. One of the reasons, they just didn't beat the whisper as it relates to their guidance. The quarter was great, so the magnitude of the beats and the guides are becoming smaller and smaller. We know that. Everyone knew that was going to happen. It was going to be, how does the market, how do investors react to that when we finally get that sort of realization? So today we have the stocks down 5%. We have Nvidia down 7.5%, and it's down 22.5% from its recent highs. That would be in late June. So one of the things that's interesting to me, if I'm just being a stock market jockey here, I look at the series of lower highs that it's made since late June, and I see this one sort of one-day action or a three-day action really from, Thursday, Friday, and today. And I say to myself, might the air be coming out of this Gen AI trade a little bit? And again, it's not something that means that the business or some of the things that some of these folks are working on is over. You're going to continue to see progress being made and distribution being made, and really an eye towards, greater revenue growth and then ultimately profits at some point. But we know that these stocks can come in pretty hard, in the near term, and it's not saying much about the businesses.
No, I think you've got it exactly right. It doesn't mean that Gen AI isn't going to give us everything it promised. It just may take longer than what market participants especially, are expecting. And remember the big sell-off early August, right? It was sort of on the back of that jobs report, but underlying it was a lot of the Gen AI trade. You saw the NASDAQ and the mega caps in particular sort of just whiplash, sell off the most. And we didn't get a conclusion to that story. The big macro story, it seems like we've sort of moved past the job report, the soft landing narrative still intact, but there's still a lot of questions around the Gen AI trade. I think the biggest one that I talked a lot about last week when I was in New York is, when is this Capex cycle going to calm down a little bit? We know the mega caps are spending enormous amounts of money. Is that going to peak in 2025? Is that still sustainable in 2026 if we're not getting the killer apps, the killer use cases, the killer monetization of generative AI, which is a similar discussion we were having about the overhyped AI device. It's also overhyped in the enterprise and other applications. We're going to get there, but there's still that trough of disillusionment that you have to go through. And maybe that's where we are now.
Yeah, I mean, listen, Nvidia was down 35% from those June highs to those lows that are made on August 5th. Now, obviously, that was a bit of a panic. And the last thing, I'll just kind of add to your commentary there is that the Gen AI trade in the public markets is very narrow. And we've been talking about that for over a year now, right? And so when I think about Nvidia as the sort of picks and shovels, and they have 90% market share of high-end GPUs, and then Taiwan Semi is the largest, second largest component of the semiconductor index, and they make, 85% of the high-end GPUs based on the designs that come from these other semis, and really just one semi. And I say to myself, okay, if you're going to have that sort of pullback in demand because you don't have monetization, Nvidia has the potential to go much lower, and, from its highs in 2021, when people were really geeked up about, gaming and data center for different reasons, right? And then obviously crypto mining, the stock sold off more than 70% to its lows in 2022. And I know that seems like far-fetched if you think about what's happened to the revenue since then of Nvidia, right? But I say to myself, it could happen again. Meta that we just mentioned, it sold off 70%. So from those highs in 2021 to the lows in 2022. And the last thing I'll just say, and I'd love to get your take on this, is that 40% of Nvidia's revenues come from Microsoft, Google, Meta, and Amazon. And I say to myself, if they're not getting the monetization after these huge product releases, then they're going to pull back. And they're also developing their own chips because they want diversification away from Nvidia, and AMD is not there, and certainly not Intel. So thoughts on the customer concentration in Nvidia, and then obviously, how this could basically, this could go pear-shaped a little bit when you see the sort of revenue growth that Nvidia has had over the last 2 years. At some point, it's going to go X growth. And what does that mean for the stock and the entire group of stocks, which is just about 10?
Okay, so two different issues you brought up there. Customer concentration is one of them, and it goes to that CapEx payoff, right? Investors want ROI, and we're just not seeing the monetization of these generative AI products take off. So will that CapEx go down? I think that is very real, and that is a risk for Nvidia in 2026, right? We already know that 2025 is going to be a big year of spending. However, where I'll take the other side is that Nvidia is a very different company than it was even a few years ago when it was during like the Bitcoin boom and the gaming boom and all these things. The last conference call, Jensen Huang talked about it being an AI factory. And that's exactly what it is. It's no longer just a chip company that makes GPUs that, has 90% of the market. This is a platform. This is becoming as vertically integrated as, Apple and Google are. Its software works best on its chips. And I just see it being more and more impenetrable. We interviewed last week when I was in New York, this company that wants to compete with Nvidia on the inference side. And that's sort of a concern from Wall Street, is that competition is going to intensify when you get to inference versus the training of the models. And here I just see that Nvidia continues to build up its moat. And, you just can't call it a hardware company anymore. You can't compare it to Cisco, in the internet boom. And then, Cisco, how when the air came out, it never regained. I think that Nvidia will be different because Jensen has created a much more complete ecosystem.
I mean, that is dependent on Blackwell and if it ships, in any time in the next few months or so. And that's the thing, or starts to ship. If you start losing faith in these kind of upgrades that he has promised as far as Blackwell in 2025 and Rubin in 2026, the moat that they have as far as software and the like, it becomes less interesting to investors if they can't start to deliver on some of that. And you and I, obviously, we have no clue we have no clue what's going to happen there. All right, one last thing before we get out of here, because I'd love to get your take on this. As we think about Google and Meta as being these large beneficiaries that we just talked about because of the size of their properties and their distribution, we got to talk about TikTok for a second here, because if you think about, the property, 1.7 billion monthly active users and the like, and I guess the question is, we're not even talking about what they're building on Gen AI, because to me, this has to be a name, at least as we think about it in the conversation, given the engagement that they have on their platform and the size of the platform. But from a regulatory standpoint, this might get increasingly more complicated, not just about ByteDance being in China and, the Great Firewall here, but, the way U.S. regulators think about it as it relates to, U.S. consumers.
Right. But do you think are you talking about the idea that TikTok might ultimately be banned here?
Well, two things. I mean, as they continue to develop Symphony, right? And this is their kind of, AI model here. And then U.S. customers become increasingly, dependent on it as they relate to their engagement with the platform. I do think of it as a basically, another leg to stand on if you are a U.S. regulator. And we know that, we've gone back and forth from the last administration to this administration, and then large investors in ByteDance who might be, backing, President Trump, who originally kind of raised, kind of the eyebrows about this. This is a few years ago, and then he seemed to do an about face. It's not something we've been talking about in this campaign, but I have to assume at some point this is going to become, a center of attention as it relates to, U.S. regulators.
It is such a fascinating story. And when you think about TikTok, it was kind of like the OG AI player in the United States, right? It did that algorithm better than anyone else could. Even Reels hasn't really been able to do it the way that TikTok is just know what your interests are and feed it to you. And there was even stories, I think, recently, right, about some election interference on TikTok, Chinese internet users sort of using it as propaganda. And TikTok is so ripe for this. Will we ever get any regulation, even if it's developing AI more straightforwardly, like its own AI model, I'm not optimistic, but it does raise that question. Like, how do the arms race in AI, it's not between US companies, it's between US and Chinese companies, right? And I think that will be on display in the weeks and months ahead and have important implications, like it will for ByteDance, which is operating here within our country, where so many internet companies, Google, Facebook, et cetera, Twitter, they're all still banned. And China might look really smart for that later on.
Well, I can't wait to talk a bit more about sovereign AI because that's going to be really interesting. We know that with this story.
Oh, well, hey, sovereign AI, Jensen Huang talked a lot about that on the Nvidia conference call. And that was one where I thought, maybe that will make up for the hyperscalers, tamping down their Capex plans. Maybe countries will start to spend more
Think
on.
about it, though. The arms race, as you just said, is between the U.S. and China, and they're not able to sell their best, high-end GPUs into China. There's been tons of stories. I think the information has reported a bunch about this, is that, how Nvidia is circumventing, at least some of the regulations or the restrictions put on those chips. There's a total black market for them. And, maybe that some of the double ordering that we saw before those restrictions came in place that was really, or it was really powering a lot of that growth that we saw over the last year. Maybe that's also something that tamps down at least some of the expectations for this company. All right, Dee, I really appreciate you being here. We got to do it more often. It's been a few busy weeks or so I appreciate you being here.
Anytime.
All right, thanks so much. All right, stick around for my conversation with Sam Lessin of Slow Ventures. All right, welcome back to OK Computer. I'm Dan Nathan, joined by Sam Lessin. Hey, Sam, thanks for being on the pod.
Thanks for having me.
All right, you are the co-founder of Slow Ventures. You're a former Facebook product guy. I bet that feels like in a different life. You are the co-host of More or Less podcast, and also says in your bio that you are an intern over at The Information. So welcome. Let's start with the intern at The Information, because regular listeners know that is probably the most quoted publication on this pod. I've been a subscriber, I think, since it started out. What is your connection with The Information?
Well, thank you. The connection really is that Jessica Lessin, the founder and CEO of The Information, is my wife, which means that since the beginning, I've gotten coffee, helped with a tech thing here or there, written a few columns over the years. But that is, I think, you started my career. My first job was an internship, and likely my last job will be an internship for The Information. So it's a full cycle thing.
Very, I guess I knew that your relationship there, but, and I've read your posts, and it's funny because they're definitely editorial, you know what I mean? And
yes.
I think a lot of what they do is just such good reporting. Sometimes
that is what
it feels
they do.
like
that is, my wife wrote 1,000 articles for the Wall Street Journal before she started The Information. And her thing is serious, well-reported news. I think they probably at this point are the largest full-time news team covering tech of anyone. Maybe Bloomberg is still a little bigger but no one else is, just covering tech. And that is their bread and butter. And for years, I've kind of shot my mouth off here and again with an opinion column.
Yeah, no doubt. Well, it's interesting. I think there's very few folks out there who cover generative AI the way The Information does. And they were really early on it, and they were getting a lot of the nuance. And, and there's also a lot of skepticism, too, about it. And that comes through their reporting, not as much opinion. So I really appreciate it. Really quickly, because let's just pump your pod. What's going on over there? More or Less, obviously, it sounds like Jessica's involved in that. You're involved in that. What do you guys? What's
look, the quick version. About a year ago, we're good friends with Dave and Britt Morin, and we were having dinner with them, and our kids were all crazy running around, and we've had great conversations with them over dinner for 15 years. They're old friends, and it's funny because their names happen to be the More-ins, and we happen to be the Less-ins, and they are always more excited about everything and boosting everything. And candidly, Jess and I are always less excited about everything and shitting all over everything. And so we figured, hey, we'll make a podcast because we like catching up once a week anyway. We'll talk about technology. Jess kind of brings a real news angle. And then, we all just sound off on it and have a lot of fun. And candidly, we would do it if no one was listening, because it's just fun to catch up with your friends and talk about this stuff. But it works for us in our niche, right? I don't think it's the largest podcast in the world, but it's big enough with the communities we care about. So it's fun.
Yeah, I think that's kind of the most important part. I mean, a lot of folks are not focused on monetizing their, like a conversation, like that you're having on a weekly basis. But I know you guys have a big following, and I'm sure lots of folks are interested in hearing that. You guys are like the all out crowd. And I've listened to a few. It's really good, and I can't listen to the all in for whatever that's.
Yeah, I mean, that was the other thing is like
That's my
we joked that we'll start a non-misogynistic all-in pod. But for us, it's like look, I mean, the reality is it's funny talking about monetizing podcasts. Monetizing podcasts is really hard. They're fun to do, but like our goal is not to like sell ads, right? Our goal is we have an authentic conversation. I will say, however, it's been surprisingly good for business. My day job really is as a venture capitalist. And, you can make fun of VCs for being all over Twitter and all the bullshit they do, and they do plenty of it. But in the end of the day, putting your ideas out, the right people find you. And the number of deals I've done, because someone's like, oh, you said XYZ on your podcast. And I thought that was really interesting. Let's talk about blah. And you learn something and you might invest in something. It's valuable.
It's actually a good calling card, and we kind of think of it that way too. So, OK Computer and, On the Tape and Market Call and Market Matrix. I mean, we built a business around this. We're trying to think of it as like kind of the ringer for financial markets and a little tech. And so, we think of our deals with our sponsors. It's really brand sponsorship, right?
Sure.
So we think of it as like kind of a 360-degree marketing thing. We do lots of events for them. We kind of bring on some of their folks and, and their thought leaders and the like. So for us, it's been really fun to kind of build this thing. Let's talk about how you built Slow Ventures. You are a co-founder there. I'd love to hear a little bit about your focus, how that's changed over the last few years, because I know that, your tentacles, they spread wide. You've been in the tech business, it sounds like, for 20 plus years. You were a product guy at Facebook. You were founder in a couple different companies, and now you invest through Slow Ventures. So talk to me a little bit about Slow.
Yeah, I mean, like, I think the best thing is just, they're just kind of authentic. And the reality is like the Slow Ventures kind of happened slowly, right? Ironically, right? Initially, when I was, I started out my career in New York. I was at Bain and Company. I left. I started, a venture-backed company when that wasn't things. It was like pre-Y Combinator. It wasn't a thing kids did. And so it was kind of unique. And the New York ecosystem was really interesting then, right? Because it was kind of weird. It was a little bit of a backwater, post bubble bursting. But there was this really interesting group of people. It was, that's where Venmo got started. I was Venmo's first investor. That's where Birchbox, which basically invented this kind of subscription commerce thing, was started in my office, and like invested in that. Muckrack, which no one's heard of, relatively speaking, but it's probably the most successful thing to come out of New York. I mean, it's like a massive company at this point. It was also started in my office. Like, there's all this interesting stuff was going on. And so you did the thing you could. You scrounged together 10 grand or whatever. You got to be Venmo's first investor and help them along and kind of built an ecosystem around that. And then, when I worked at Facebook, I reported to Mark. I was VP of product there through the IPO with, and at that time there were 3 of us that were VPs of product. Now I think there's probably 100, but like, it was a different era. And, you just saw interesting stuff, right? And so it was just part of being in the ecosystem. Slow then, ended up being this side pocket where we kind of all were doing angel investing. And then we said, hey, let's team up on some deals. And like Slow Ventures became kind of a little community fund and things like that. But then when I left Facebook, me and Kevin Colleran, and at the time, Dave Morin from More or Less, right, kind of professionalized it. We said, hey, we should raise actual money, right? We should go like make and at the time, people forget that wasn't such an obvious thing. Like, you go to people and say, hey, we're going to do an institutional seed fund and we want like big serious LPs to give us money for a seed. And they'd say, that's not a stage. That's an angel investment thing. Series A is where we start, right? And so we had to convince people to do that. Fast forward, whatever it's been, 10, 15 years, I think it's 10 at this point. And like, institutional seed is huge, right? In fact, I'd argue it's too big, right? But like, we kind of rode that wave initially with our 65 million, then 150. We try to keep our venture firms around 200 million bucks a pop because we think that's how we know how to spend. So it's been a great ride. I mean, we're generalists. We started out doing the obvious stuff you would do, the clubby deals that you would front run the Series A firms on, the Slacks and the Postmates and the whatever the fucks, right? Airtables, things where you're like, you could see it first and go faster and just be earlier, right? And, I think over time, as we've learned and as we've gotten bigger and more serious in terms of how we think about venture capital, we've realized and the ecosystem's changed. Like we still do that. Like we'll still front run Series A firms in like obvious stuff, but we also have stronger personal opinions, right? So like we're very anti generally seed investing in AI companies. We're very pro small business platforms. I had a really strong thesis. There was effectively an anti-Ethereum thesis in 2016-17 that led us to invest in the seed of Solana, which was a 1200x cash return for our LPs in like 3 years. We turned 500K, less than 500K into $650 million for our LPs, or Algorand, or, a lot of these interesting things that we like to be a little more thematic now than we were, but we're fundamentally generalists.
Yeah, that's most folks are not fundamentally generalists, right? When it thinks about it, they're verticalized a little bit. I want to go back to Facebook for a second, and I think it's interesting that you mentioned that you were one of 3 product guys, and
Well, not
they
three
probably have
product, 3 VPs. There were other product guys, but there were this,
VPs.
yeah.
Yeah, and so give me a sense. I think it was 2012, right? And so somebody in corp dev, biz dev, corp dev, whatever you want to call it, basically said, okay, we're going public with this blue page, and they must have seen something about what was going on there that they bought Instagram almost on the eve, right, of the IPO. And I remember at the time, what was it, like $1 billion acquisition or something like that? And a lot of folks were like, what the hell is this? They're buying this pre-revenue company, for photo sharing and this, that. And so it's pretty fascinating to think that, flash forward, what are we, 12 years now? This is a $1.4 trillion market cap company, and Instagram is probably worth half that, if you will. So yeah. I'm curious.
Yeah, I don't know. Like, look, I mean, again, that was a fact. Like, I have had the pleasure and the great luxury of being in some very fascinating rooms over my career, right? And I think if you're talking about the pre-IPO window and the Instagram acquisition, I mean, I was definitely in the room where that was happening and debating it on all sides, as they came together. Most of those stories will go to the grave, but I will say that the thing that I think. Mark is an incredible leader, right? And he's an incredible person. And, I really admire him in a ton of ways. But I think the Instagram thing was a really good notice of just understanding how small things, well positioned at the right moment, can get really, really big and be really important. And now, there's all these stories. Well, Instagram is it's worth so much money and it's so big. And my God, isn't Kevin Systrom such an idiot for having sold it? Like, there's all these things people say, right? And like, I think there's like it's more complicated in reality than people might like. Would Instagram be Instagram if Facebook hadn't been able to grow it up on its infrastructure and its ads platform and invest all it did over the last 12 years? Like, it's not like some magic thing that would have just been Instagram without Facebook, right? Adam Mosseri, who's now been running it for a long, long time, who's a dear friend, right? A very close friend. He's done an incredible job, right? The product of Instagram of today is not what Facebook bought back in the day. But that said, it was a bold bet by Mark, right? That paid off ridiculously well to say, look, we're going to do our own photo stuff. We're doing our own mobile transition. But if this thing is working, right? And this thing has kind of hit wildfire at the right moment on the App Store, and is growing, has a slightly different graph, a different approach, a different feel. It's worth $1 billion for us to own it, for sure. You could look the other way, you could reverse it. You say, again, there's so many angles to single stories. Instagram wasn't $1 billion acquisition, right? If you want, there's like, what did it actually cost, right? Depends how you look at it, right? Like the stock price, I think, was valuing Facebook at like $50 billion at the time. So you could actually argue, right? It's whatever it is, 1.4, it's 30 times more expensive. It was really a $30 billion acquisition from an market cap perspective. If you roll it forward to today, you could argue that it was a free acquisition because the market didn't hate that one, right? And so the stock price went. I mean, there's so many ways to look at what it was, but ultimately the trade of saying like Instagram will be much more important and we can grow it and we have the right platform to make it work and they bring something really valuable to the table, I think was all really right and, really interesting, right?
Yeah. Well, at the time, the stock went, remember, it opened at 38. It closed at 38. It was a $100 billion market cap, I think. And then, Barron's had that article with the thumbs down on the cover. You remember that?
I don't remember that, but I certainly remember the stock price going down and NASDAQ fucking up the stock launch. That one's seared in my memory.
We'll put it in the show notes. It was an absolute, that was the bottom. I think it was, the stock was like $18 or something like that. It was probably in
Yeah.
2013. And so it's interesting what you had to say about the valuation and what it actually cost for Instagram. And I don't want to belabor this, but it's interesting. Like, I remember Facebook tried to buy Snap, I think pre-IPO. Is that right? For like $4 billion or something. And
I
it's pretty,
yeah. Go ahead.
no, go ahead.
I don't remember the
You can,
details exactly on that one and how serious that was. But I
yeah.
would say this, that any range of Snapchat having sold to Facebook in that era would have made Snapchat investors and Evan richer than what Snapchat is today, right?
Well,
Um,
that's where I was going. I mean, it has a $16 billion enterprise value. They have not been able to grow sales meaningfully over the last few years. Users have plateaued or probably going down, and their monetization of those users is so poor. So when I think about that and Twitter, they're both dying a slow death. Now, Twitter's is like, feels like, suicide for all intents and purposes as you think about that. So I want to go to, this fact is like, there aren't any meaningful kind of social platforms that have been built other than TikTok. And that was not built here. When you think of the different properties that Google has, that Meta has, there's nothing else, man. Like, when you think of, TikTok as, 1.5 billion or so, monthly active users. So is that period of, innovation just over?
well, I think it's just, again, I think these things are complicated, right? So, like, what is TikTok? Like, for instance, it's certainly an enormous competitor to Meta when it comes to ad dollars and attention, right? But is it social media or is it just media, right? What is Instagram? Is Instagram a social media company or is it a media? How do you define these things? And I think the reality is like the story I would tell goes something like this, which is you have to put things in their historical context, right? And before social media, just for pure entertainment, right? What was the most entertainment thing you had? Like People Magazine and the Checkout Council. It was like these incredibly bland, like celebrities, right? Like celebrity gossip. Like this shit kind of sucked, right? The innovation of Facebook really was it turns out that your real life friends are way more entertaining in general than like People Magazine, right? So everyone's like, social media, rise of social media. What are your friends saying? Sure, they said they ate a sandwich for breakfast, but that's actually more interesting than some Jennifer Aniston thing that no one cares about, right? Then you have but that's not the end of the game, right? Like the reality is, if you think about it, who's more entertaining than your friends? Well, professional friends, right? So all of a sudden you have all these niche celebrities, niche people that they don't appeal to everyone, but they're able to appeal more deeply to specific audiences. Well, what's more entertaining than professional friends? Well, I would argue that like TikTok, you know what TikTok really is? It's kind of like America's Funniest Home Videos on targeted steroids, right? Because it turns out that sourcing content from everyone, right? But then targeting it really well is actually more entertaining than like the one person you follow. So you kind of think about these things as like actually like what is the core metric, what's really being driven, what's the real emotion, and then how does it ladder up over time? What's going to come next is AI driven personalities, AI influencers, are they going to be more entertaining and engaging than humans? Well, they don't sleep, they can be even more targeted, they're cheaper to run. Like there are arguments that it could. The flip side is, because they're not real, are they too bland, are they not interesting, right? So you have to think about these things in terms of objective functions. I think that's what's been going on. So will there be another quote unquote social media time? Will your friends ever be the most entertaining and engaging thing again? There's an argument that no, right? That was a moment in time that came and went. There's a separate thing, which is social capital. How do you share real, meaningful relationships, that type of stuff, which did overlap. Like Facebook was both. It was entertainment and that, right? Now, a lot of that stuff is iMessage, it's WhatsApp, it's like other things. And so I just think you kind of have to think about these things in terms of what are the core human behaviors that are being driven, and then what is the best way to fulfill those. So when people say, well, what's the next social media thing? I'm like, I think you might be missing what social media actually is, right? There is social and there is media, and both continue to progress dramatically. But will they ever be exactly the same package? Will there be Facebook too? Almost certainly not, right? That was a moment in time.
Yeah, it's interesting. So to answer that question, I think it's authenticity is the thing. And until we reach AGI, the idea that there's going to be, AI generated, media, yeah, it's going to exist, but whether it really is the sort of thing that we connect with. And, the other thing I'll say, there's a certain sense of
yeah, go ahead.
Well, I was going to say there's a certain sense of irony is that, those gossip celebrity things are the last print mediums that actually really exist. So people are
Nah, they're
still,
they're all dead though. I mean, like those are walking zombies, right? Like the
yeah,
you know
no,
the
yeah. But you don't get your Sports Illustrated delivered to your house anymore, and people still pick those up. And again, I'm not
no,
making a
that's
case for
like
those.
bankrupt. I mean, that's almost a
Yeah,
perfect example. Like, there's no Sports Illustrated swimsuit edition. Sports Illustrated is
yeah.
basically bankrupt. I mean, like, so I think just to push you, here's I think the thing to understand about like AGI and authenticity, I couldn't agree with you more that authenticity is what matters. In fact, so much so that we're one of the only venture firms in terms of our practices that will invest directly in cults and communities and creators specifically as the key nodes. Like, I actually believe that like trust is the final currency from a social perspective, and there's incredible businesses to build in vertical and niche trust. Like, we're really into that theme. So I agree with you. But again, there is a difference between entertainment and information and social capital. These are all different things. And the entertainment one's interesting because I do think that even basic AI, in theory, can be more entertaining than most people. Like, it's pretty good at writing jokes and it'll get better at that over time. And so I think that like you don't need AGI to basically get people really entertained, but you're not going to have AGI that's highly trusted like ever, for a very simple reason, which is like there's no objective function. Like, the reason you trust someone, there is retribution, there is identity, they want to do the right thing for you, they're building capital. And the problem with computers is like they don't care, right? There's no like there's no reason for them to not cheat on you to some degree, right? And so I think that's going to be the real thing, is that people think it's a computer science problem. It's not. It's actually an economics problem, right? Is the way to think about it.
Yeah, and again, I think the idea there probably needs to be a new, term that's going to, kind of be established for whatever these new social platforms are. Because when I think about, to your point about like what makes social media, I think it's engagement and virality. And I also think there needs to be obviously a level of trust that you just mentioned. But like, for instance, I used to be a power user of Twitter. I used to use it for a whole host of different reasons. There's social capital, there was, engagement, there was, a lot of different ways that you would use I used it as an RSS feed. I don't use it anymore. I'm not on TikTok. I've never had the blue page for Facebook. Really, the only thing I use is Instagram, and it's closed. And I have 300 people that I know, and we have a certain level of engagement, trust, and virality within these closed sort of ecosystems, if you will. And so then I think about what's the most interesting thing I've seen that I might use that actually kind of checks all those boxes. Have you looked at this belly? Okay, so there's a lot of things going on that are very similar to what I was just kind of referencing as it relates to social media. And so I haven't seen anything like this. I know it's growing very fast. They haven't even turned on monetization, but there's a gamification aspect of it. There's a lot of interesting
Maybe.
things there.
I think we're just probably in this. We're in this era where you're going to see a lot of fads, right? And they're not good businesses. They come and go. It was what was the one with the front casing and the back casing? Be Real or whatever the fuck.
Yeah.
It's like you're just going to see a bunch of this stuff because there is an element to which the software and these platforms are fashion. People want to be on something new and different for a whole bunch of social capital reasons, right? And like, so I do think there's like, you're just going to see, but we're long past, I think, the important infrastructure era of a lot of this stuff. And I also think the reality is like, it sounds like, we're past, I would actually, the super app era. So here's like a hot take would be that, it sounds like you used to use Twitter effectively as a super app. It was a lot of things too. It was social capital, it was entertaining, it was an RSS, it was all of these things, right? And the problem is there's going to be individual things that are way better, right, for each of these, right? And I think there's those, if you're pretty good at lots of stuff, but great at nothing, and the switching cost is zero, it just goes into like lots of different places, right? And I think that's kind of what's happened in a lot of ways is like, TikTok is going to be way more entertaining than Twitter because like dancing videos are just way more entertaining than like text. Like, like that's just how it is, right? Your social capital thing. I mean, most people don't use Instagram for that, although some do. Most people use like WhatsApp for that or iMessage, right? Like, and you kind of, and like what matters more is the voices and the platform. The platforms are all fairly generic, right?
Yeah. Well, so here's one for you as far as we're talking about consumer facing platforms. Do you think that ChatGPT or Perplexity as a wrapper, or however Claude is, like kind of used, do you think these have potential to be like to meaningfully break in? We've heard some numbers that ChatGPT might have 200 million users, or like these are growing kind of fast, but they're all the same, right? So it's like if you went back to 15 years ago and there was 5 different Snapchats, you know what I mean? Like they wouldn't be that interesting because there was going to be 1 or 2 that won. And I'm just curious how you think about these
I
platforms.
mean,
And I know it's
yeah,
very early.
I've said this a lot on the internet. They're all going to zero, right? Like they're all worthless, right? And they're going to be, I think, going to look back on them as some of the greatest lighting money on fire moments in history, right? And look, I think you have to understand the incentives around these things. It's like, look, venture capitalists desperately want something they can plow tons of money into and will become $1 trillion. It's like they're desperate for it. Like they need it. The whole narrative is about these types of opportunities. And so you start seeing mirages where there aren't any, right? If there were deep network effects to ChatGPT, like if it was able to get much better, much more quickly because everyone was using it, then maybe like you get a head start, you compound it, you're just so much smarter and better, and like, no one can catch you. Fine. And then, there was a moment where we thought that might be true, right? Like where they're like, ooh, because they're going to get all the queries and then they're going to reverse engineer those back. But people are too smart for that this time around, right? Like that's why all these companies have gated their data out of it and things like that. So unless they're playing massive games, which by the way they might be, like it's very hard to see any compounding advantage. I think they're unbelievably expensive to run, right? Like the thing about social networking and even early search rivers, like, these were incredibly capital efficient companies. They had great monetization that was obvious from very early, and they were cheap as shit to run, right? And so you could get the flywheel going. These things are like every generation lasts less time before you have to retrain a bigger model in this war of attrition. And it's impossible to get the payback on the amount you have to spend to train these things. And to your point, they're all like fairly generic, which is why I think you get these AGI stories. Is the only justification for doing this type of investment in a chat GPT or whatever it ends up being is some belief that seems somewhat religious to me in most cases, that you hit some point where like you inflect, right? Where all of a sudden you have like AGI and like it figures out how to optimize itself and like you hit this like magical moment. Again, is there a 1 in a billion chance that that's true? Sure. Like you never know. Life is long, but everything in history would tell us that that's not going to happen, right? That we're way under leveraged on that being the future. And so in the meantime, you have really no justification for the amount of capital being expended, right? For the business that doesn't exist.
Well, 2 things on that, which is interesting. And there's a certain sense of irony, when you think about the proliferation of social apps and kind of the incremental leverage, right? Like to your point, that like those companies got, but they also were leveraging AWS and these public clouds, right? When you think about that, to me, it's kind of interesting because the infrastructure was created for that. But now, 15 years on, you have this use case, right? There that you need all that compute, all right? And you can rent it from Azure or, whether it be AWS or Google Cloud. And when you think about the fact, like to your point about the kind of all the capital that's being plowed into these models, I mean, when you think about like the investment that Amazon made in Anthropic, or you think about, OpenAI and Microsoft, not only are those big resellers, but they're also giving these companies credit as part of those, those investments or credits on their cloud platforms. And you just kind of made the point. Well, maybe there's some games being played. That's the game. I mean, when you think about
that's
Nvidia,
part of the game. I think there's a lot of games being played. I'm a first principles guy, and like, look, I actually have absolutely no problem. I think Meta's going to make a lot of money on AI, not necessarily in their research stuff, but more just like how you make money on LLMs when you have a huge ad platform and the distribution and you're making the copy more efficient and the, pictures more efficient and targeting more, is kind of obvious. Like it actually is the right model for that. There are things like translation. LLMs do great. Like there are opportunities in the space. And I don't think that big companies, I mean, the reality is if you're a really big company, is it worth spending 5% of your market cap just to be safe, just because you can, right? Like, sure. If the narrative is big enough, like again, risk adjusted, why not? Like it's not that big a deal. I just worry about the Pied Piper effect where like all these people get sucked into it and a lot of capital gets destroyed in the process for people who don't have the luxury of $1 trillion valuation and like a way to actually make money on this stuff more directly, right? Is the way I would put it.
To that point, I mean, OpenAI, they're raising at 100 billion right now. They probably have 3 to 4 billion trailing revenue. Obviously, they're not making money. And I just went and looked at this, and I use Perplexity all the time. I just put it into Perplexity. I mean, what was Facebook's market cap? And again, it's a different world. That was 2012 on the close of its IPO. It was $100 billion. And, I mean, you probably know this, but they had $5 billion of revenue at the time. Now, they were profitable, I think, on adjusted basis, probably not on a GAAP basis. And just think about how far we've come since then. We have 5 companies that have trillion-dollar market caps here in the US. And to your point about, these companies not looking back and saying, I wish I made more investment in this. But like 2 of the winners to me, even though they have not been a huge part of the conversation over the last year, well, at least Google has been a disappointing part of the conversation. Meta has only outperformed to the upside, despite the fact that we don't hear llama, 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 and we're just starting to hear Meta AI. And when you think about one of the key, success, I guess, metrics is going to be distribution. Well, those 2 companies, they have the distribution, right? And the marginal cost probably for them, you know what I mean, is not huge, when you think about matching that up with the distribution, especially after the initial spend. And so I'm just curious what you think about that.
Look, I mean, there's so many ways to think about it. Like on the flip side, I'd say that OpenAI, the thing that OpenAI has done really well, I give Sam great credit for this, is the marketing. Like if you said, what is AI globally? They're going to say, people are going to say, oh, it's OpenAI, it's, Chat GPT. So like, that's worth something, right? Now, I'm incredibly skeptical of the $100 billion valuation for a company that's losing money, not because, look, I just don't see the past them not losing money. That's the real problem, right? Like if you told me they're the dominant brand that everyone knows in AI at this moment, rightly or wrongly, whether or not it's the best technology, their cost structure is going to go down, their margin is going to go up. I understand why this is fine. Like I actually think that's potentially reasonable. The problem is that's not at all what you see, right? You see that each model is 10 times more expensive than the one before it, right? You see that there's no path to profitability at all for any of this stuff. And you see, to your point, like if anything, people are catching up with them. They're not outpacing everyone else. And like, I don't know. Again, I'm pretty on the record for this and I'll keep doubling down on it. This is not a space. I think it's a space that I'm very happy to be a public market shareholder in some of the people who are going to, I think, benefit the most from this. It is a space I think is an awful space for seed investors, right? And like we don't do as a result. I could be wrong. I've been wrong many times in my career. I don't mind being wrong. Part of the nice part of being a seed investor is like I actually have tons of permission to be very, very wrong most of the time. So wrong as I'm super right every once in a while. So you got to understand everyone talks their own book, right? But I don't see it personally.
What do you think? I think the next sort of marketing trick is going to be, AI on device, right? So we've already seen, Pixel, we've already seen Samsung, kind of tout that these offerings, next week on September 9th. Apple's going to introduce their iPhone 16, and the promise there, if you go back to WWDC in June, is this kind of on-device thing that they've done well with in the past, is kind of merging their hardware sensibilities with, software. They work well together. But when I think about this, I think one of the reasons why investors got excited about this is that once they learned, this is Apple investors, that Apple wasn't paying anything for some of the, OpenAI capabilities that they were going to integrate into the iPhone, they're like, listen, this is, it's just pure upside if this stuff kind of works. So I'm curious how you're thinking about that, because to me, I think this is at least a year, maybe 2 years out, where consumers are upgrading their devices to have this sort of stuff on the device. Because the way I think about it, I use lots of Google apps on my iPhone, and I pay $20 a month for Gemini, whether it's worth it or not. I just don't need something on my device at the moment. I'm just curious.
I don't know. I don't think people give a shit about any of this stuff. I think what the reality is, they care about, like, honestly, like I think it's all Silicon Valley talking to itself. In the end of the day, do I want next year you'll have a long press on an iPhone photo and like remove a person from the background? Yes. If Apple doesn't have that, am I going to buy a Pixel phone? At some point, yes, right? Like it's just table stakes, right? To like be able to do something. Do I want Siri to not suck? Yes, right? Like, is it table stakes? Yes. It's like, it's fine, right? And like, I think you have the same business models you always have. Apple will charge a shitload for devices. Android will charge less and have more people, like fine. It's all the same story. And like it is a never ending war of attrition for more functionality. But I think the branding of AI, like, ooh, you have the AI, right, is quite silly. And I just don't think it's a consumer story anyone cares about, right? So I don't, again, it's this fine line to run, which is I don't think that there's no value in LLMs. I think there's a bunch. And I think it's actually table stakes you're going to see in all the devices. And it'll have, but no one's be like, I'm buying it because it's on device AI. Like that sounds like there used to be people in like like in the late 90s, early 2000s, you'd talk to like tech bloggers and they'd like talk about the tech specs on like, I don't know, their Windows 2000 machine and how much RAM it has. No one cares, right? Like, and so the question is then who's going to profit on it from a business model perspective? Like, who makes all the money? I think Apple does fine. I think Google does fine. Does the company that's empowering some of this stuff and losing money on every transaction and for brand, is they going to do okay on it? I don't think so, right? Like, I think that's like a layer that eventually rationalization happens, right?
Yeah, believe it or not, I mean, Wall Street, public market investors can be really stupid. Like, Apple in the days after WWDC gained like $200 billion in market cap because, some big money decided that this is the next big thing, you know what I mean, on device. So, I was not in agreement with that. I was wrong. I feel like if you're building on Siri or you're Amazon that's putting Claude, built on Alexa, I think these are kind of losing propositions in the near term. And I don't think, to your point, I just don't think consumers are going to upgrade anything for this stuff
I don't
until
know. I mean, I
it
think
becomes
people,
mass.
I just am somewhere, I guess I like agree with you, but not completely. I'd say one, this is the classic, like, what's the kind of the stupid person, the pretty smart person, and the really smart person, and the really smart person, the really dumb person look the same. You as a Wall Street trader can be like, Apple's going to announce quote unquote AI shit, and we should buy it because it's AI shit, and the market will trade it as AI shit and make a bunch of money. And like, it maybe isn't a long term thesis, but it's perfectly reasonable, quick trade if that's what you do, right? So I don't think it's like the market will reflect itself. I don't think it's crazy to get these bumps. They might not be sustainable or real long term. You just have to be clear about what's actually driving the market. Is it trading or is it investing, right? And I think both matter, right? If you're going to make things. That's why, look, as much as I would never, like, you should short Nvidia, but never, ever, ever short Nvidia, right? It's a meme stock, right? And like, it's the scariest short ever, right? Because it can go to infinity if people believe some narrative. And so you have to be really careful with that. So there's a whole other level. I also say, like, look, eventually, if your iPhone doesn't have long press to remove person from background of photo, will you upgrade for that? Yes. If the Android phone has long press to remove person and the iPhone doesn't, will you buy an Android phone? Eventually, yes. Like, there are functionality that like is enabled by LLMs or some of this AI stuff that like people will want and will upgrade for. But the thing about it is, the question is there more margin in it, right? Or is it just a war of attrition? And I think that's the real question that people need to be asking themselves, is like, where is the business leverage? Like, where is there not just an increased war of attrition? Does that make sense?
Yeah, well, it's far, yeah, 100%. And when I think about Apple versus, Samsung or Google, I mean, Apple has like 80% of the gross margin in the hardware business, in the smartphone business. You know what I mean? Like globally. And so when you think about it's a company with like 45% gross margins, the opportunity for them for multiple expansion comes with margin expansion. And if these services play a bigger role, like for them, it could be an absolute home run, especially if they're not paying to license OpenAI or Gemini or the like. So, I mean, that's just my quick take, but I think that's going to take a couple of years to be
Sure.
realized.
But again, I'm more blasé about this stuff. Like, the only thing I'm personally not blasé about, and it is, again, talking my own book and very much my wheelhouse, is it upsets me when I watch seed investors light money on fire, right? And like, that's the place when I think people are undisciplined in these private companies over long periods of time. I just don't like it because it distorts the market. Then the entrepreneurs end up working on the wrong shit and wasting valuable time and effort in their lives working on stupid shit, right? Or like, people are literally wasting dollars that could go to funding like great entrepreneurs doing XYZ elsewhere. So like, that annoys me. The market trading up and down on AI, I think, is just kind of more comical like than anything else. And like some of these bigger stories, I just don't. The good news is our iPhones will keep getting better, right? Great. Like, what the business implications are of that, right? It's just not 100% a straight line that because your iPhone gets better, you're going to pay more for it. In fact, if anything, I'd actually argue that and again, I haven't done the math on this, but if you think about like the specs on a 2024 iPhone versus a 2007 iPhone versus like the price change in it, it's massively deflationary, right? Like massively. And that's great for capitalism and that's great for consumers, but it's not, fun. It's not necessarily great for Apple, right?
Yeah, it's one of the areas where Moore's law has actually been working a bit. It's interesting to me also in the public markets and actually in the private markets too, because the information's been reporting on this a lot about some of these companies that are just failing already, and they're talking about acqui-hires and the like here. But when I think of the public markets, air has come out of the folks who make the servers, the folks who put the memory in the servers, right? And so, like, if you think about, the build out that we're seeing by the hyperscalers, at some point in the next year, we could have massive overcapacity. And it's not too different than what we saw in 2022 with the COVID hangover with some of these folks. You know what I mean? Like, it was kind of something that was playing out in the public markets. And some of these companies, people forget, Nvidia sold off 70% from its 2021 highs to its 2022 lows. So did Meta, so did Netflix, And so, I mean, the fact that they think it couldn't happen again, I think is kind of silly. That is what it is. Let me ask you one last question, Sam, before we get out of here. So you're a seed investor. So you're used to being very patient for the things that are working to kind of pay off, right? So it's either, obviously, there could be M&A, there could be an IPO. How do you think, like, what is the thing that you are most optimistic about as a seed investor if you're looking out 10 years in tech and the sorts of things that kind of get you excited? Maybe the things that a lot of your peers are not excited about.
Look, it's an interesting question because I'm working on a narrative on this right now because it is good to have an opinion on these things. Look, the thing that I am most excited about is American entrepreneurship, full stop. And you're going to say, whatever, the dynasty fund. Here's my narrative on it. Over the last 15 years, entrepreneurship became synonymous with people wanting to be the next Mark Zuckerberg, right? Everything about entrepreneurship was, I'm going to play to be a multi-billionaire and create this 0 to 1 monopolist, blah, 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 blah thing, right? And like, the reality is, I actually think there's a massive hangover in this at this point where everyone's like, fuck, there was a moment in time where that was possible. It'll happen every once in a blue moon, but I don't want to spend my entire life on like a lottery ticket, right? Like, and work as hard as I have to work to be an entrepreneur for like, maybe I get something to be that. I think on the flip side, there's incredible resurgence around people being like, I can build a good business on the way to a great business, right? I can use tech. Tech is no longer its own industry. It's everywhere. It's leverage, right? I can build smart stuff. And there's like so many amazing opportunities for entrepreneurship around small businesses, communities, cults, vertical niches. And so I think there's like this I'm actually very happy about it, and these really huge opportunities around this. It's a return to kind of the upper middle class of investors, right? Who have the ability they're smart about tech, they leverage tech, but they're also building real businesses along the way, right? And so we look at this as, the companies we can fund that take $2-3 million. And after $2-3 million, they're not ready for a Series A, or they're not going to go, now I need 10 or 20. Instead, they're like, I have a good business and I'm going to keep building it on my way to a great business, right? There's interesting M&A routes to growth, buying customers. Like, it's just business again, right? And I actually think that's really, really healthy. The number of friends I have, who have built incredibly good businesses slowly and well with good leadership in different verticals over time, make millions or tens of millions of dollars a year and no one's heard of them, is so high, right? And I'm seeing more and more of that, and more entrepreneurs coming to me like, this is the pattern. Like, I'm not playing Hail Mary ball. It's a dumb game, right? I do believe in tech. I do believe there are real opportunities all across the spectrum of American business. Really gets me jazzed, right? And I think there's a lot of depth there, but it does take a very different calculus than the calculus many VCs have been playing for the last many years, which is, I only care about $1 trillion potential outcomes, and I want to play Hail Mary ball, and something that's going to incinerate more and more capital along the way.
You've kind of broken down a lot of complicated stuff for us. I really appreciate it. Sam Lessin of Slow Ventures. Sam, thanks so much for being on with me.
Nice speaking with you, man. Talk to you.